Let's send it over to Alan Knuckman. He's the Chief Market Strategist at Paradigm. Alan, the Fed did it. The FOMC revealed a half-point rate cut, skipping past that quarter-point cut as inflation cools.
Hello, Angie. We knew the cuts were coming, but the question is, now what?
What do you think is next for the stock market, which has been trending higher?
Well, what I've been taught, and I've been doing this for a long time, if you want to be successful long-term, number one, don't fight the Fed, and number two, don't fight the trend.
What's your trade of the day, Alan?
All right, let's talk about our new play, GDX, Gold Miners ETF. Now, gold itself has been go gold, making new all-time highs here recently. Been trading between 2,400 and 2,550 for 5 months, so breakout here sends it much higher, technically speaking. But if you look at GDX, the Gold Miners ETF, it's 30% off its decade-ago highs, but it is up 150% from its 2020 lows. So it is a momentum market as well.
Are you seeing the so-called smart money moving into GDX?
We're seeing smart money accumulation on the long side in this ETF. So looking for GDX to play some catch up here. Like I said, it's a 30% off the all-time highs, so it has much more upside potential here, and that smart money sees something.
What's your option strategy using a call option, and where does GDX need to rally to for you to get a 100% profit on that option play?
So the way to play here is a GDX, a 37 call. 37's in the money. The stock's trading, the ETF's trading for about 40, so it's about $3 in the money. That option's trading for about $4.50. So we've got some upside potential here. Now we've been trading between 32 and 40 here for 6 months, so that projects a breakout up to 48. And at that 48 level, this option gains nearly 100%.
How about your trading day takeaways?
All right, let's talk trading takeaways. Trading takeaway trends. Number one, S&P scream. Came all the way back, made new highs here. Now the S&P itself is up 745% from its 2009 low and up 150% from that 2020 bottom. We're also seeing a full V recovery here, so that projects 6,300 in the S&P, which is about 10% up above. Number two, Tech not making new highs just yet, 5% from that tip top, but a V recovery targets a 20% move in the NDX. And number three, it's all about the dollar with these rate cuts. So from 1985 to now, we've been trading between 80 and 120. So right now we're about the absolute midpoint for the last many years that we've seen. So a dip below this 100 level psychologically could get it started significantly on the downside. Now let's remember, we're also 12% off that 2022 top. So the key here is dollar down means more momentum.
Good point, Alan. We will leave it there.
Thank you.
Go to businessfirstam.com for where to see our show on TV.